to Houston Real Estate Radio. I'm your host, Shanna Register, and every week we bring you news and information you can use on your next real estate transaction. I'm here in the studio this week, the RREA.com studio over in Spring, Texas, with my friend Mike Lesmeister. And before we get started, I want to give you the call-in number, because if you've got a real estate question, or if you're thinking about getting a new home this year, or trading up or downsizing this year, give us a call, 281-882-8088. Ask us your real estate questions, and we'll answer it right here on the air. I know you've got questions because there's a lot of things changing, and that's one of the things that Mike and I are going to be talking about this segment. That number again, 281-882-8088. We'll answer your real estate questions right here on the air. And if you miss any of today's show, so if you're driving, don't start texting and typing. Make sure you go to HoustonRealEstateRadio.com to see the whole video of what Mike and I are going to talk about, because this is so important if you're going to do any kind of real estate purchase this year that involves a loan. Really important. So Mike Lesmeister is here. He's with Core Lending. Welcome to the program, Mike. You've been here before.
Thank you, Shannon. Always happy to be with you.
So Happy New Year to you.
Thanks. Same to you. Same to you.
There are a lot of people out there who have finally gotten past the hump of being underwater on their mortgage, and this is the year that they're going to sell and move up to that new home that they want, or downsize. Maybe they're retiring. This is the year of transition for a lot of people, because they're no longer underwater on their mortgage. They feel like there's job stability. The economy's gotten better. Everything is stabilizing. So I know there are a lot of people that are going to make a big move this year. And so that's one of the things I really want to talk about today on the show, is just, how to be prepared for that financially, because getting a mortgage nowadays is a whole lot harder than it used to be.
Yeah. Certainly, 7-8 years ago, you had all these, no money down, 80-20 option arms, credit score requirements were not even looked at. Mm-hmm. The joke was, if you could fog a mirror, you could get a mortgage, right? And we've talked before about how the guidelines have changed. Things have gotten much more stringent. But I think somebody who hasn't purchased a home in several years, or who is a first-time home buyer, does need to be armed with some information to prepare themselves to purchase. And
it really goes to everybody, because, I have clients who have excellent credit, great employment. They know that they are the perfect candidate for a lender. And so they go into it knowing, I'm a perfect candidate. I'm going to get this loan. I have no doubts I'm going to get the loan. And so they don't foresee any issues. And the deal is, you can still get the loan, but there's a lot more hoops to jump through. Even though you're going to get the loan, there's a lot more documentation. There's a lot more things they're going to ask you for. There are a lot more things to do that you're going to have to do to get that loan. Is that right?
Exactly. And it reminds me of when I first got into the business in 1989. You had all the documentation that was required. You had all the guidelines, and then things loosened up so much. I remember when I bought a home here in 2003, and I was applying for my mortgage, and I was getting my tax returns together, and all that kind of stuff. And if I was out of the mortgage business for a small period of time in there, and I was turning him into my lender, and he said, I really don't need any of that stuff.
You're not going to hear that these days.
Yeah, and you're not going to see that, because the pendulum has swung back again, mm-hmm. right? So, people do need to be aware of what is required. A lot of it is and you put the nail on the head, Shannon. If somebody's a qualified buyer, they're going to be able to get financing. It's just going to be that, underwriting is strict, and every I is going to need to be dotted, every T is going to need to be crossed.
Mm-hmm. And that's something that I just don't think they're prepared for, because they know they're a good qualified buyer. They don't anticipate that. And it's frustrating for them. They know they can qualify, and it's frustrating that they then have to come up with all this documentation that even the lender's going, yeah, I know it's silly that we need this, but we still need it.
Right. Exactly.
So tell us some of those things that we need to be prepared for this year when we're purchasing real estate.
Great. So what I'd like to do is maybe break it down into 3 different categories. So if it's January 1, right? We know it's the new year. We're all excited now. And maybe we want to buy in March, April, May, maybe when the kids get out of school. There is some legwork that you want to do, that any potential home buyer wants to do, to put themselves in the best possible position to purchase that home and get financing on the best possible terms. And so certainly the first area is, a potential buyer has to know what their credit looks like.
Okay.
And, these days we do have, minimum credit scores to qualify. Typically for a government loan, that minimum is normally going to be 620, 640. Minimum score requirements for conventional loans are going to be a little bit higher than that. So it's important that you know your scores, but it's not just about your credit score. It's also what's on your credit report and what's behind that credit score.
So does medical count against you if you've got medical bills from a child or a spouse? Is that going to count against you?
It can. It used to be that the collections were really kind of looked past, particularly medical collections. But we've seen some new guidelines come out over the course of the last year or so that do look a little bit more aggressively at those collections. So if someone has collections, judgments, or even disputed items, even somebody who's trying to get their credit report cleaned up, get errors removed, disputed items are treated a little bit differently too. So it's important that somebody get with their lender, find out where their scores are right now and what their credit looks like. A lot of times people go to some online services. Some of them are very, very good, and the credit score information that you get is very accurate. Some of them, not so much.
Okay. So they really need to go to the lender they're going to get qualified with to make sure their credit score is good, not go online and look at FICO scores.
Exactly. It's always the best case to start with. Your mortgage rate on conventional loans, your mortgage insurance rates, all of those are tied to what your credit score looks like. So to try to get your loans on the best possible terms, you want your score to be as high as possible at the time that you're going to apply or even get pre-qualified.
Okay, and then the second thing you said is employment. That's important.
Yes. It's no longer, are you employed or are you not employed? It's what kind of employment do you have? And we can kind of break this down in one way to look at somebody who's self-employed versus, let's say, a W-2 employee. So somebody who's self-employed, and that doesn't just mean somebody who owns their own business. It could be somebody who just does contract work. Anybody who receives a 1099.
Right. Speech therapists a lot of time are contract employees, but they don't think about themselves as being contract.
And we've talked before on your show about people, as companies have restructured, whether it's due to the Affordable Care Act, due to just trying to increase their bottom line, have moved employees from being, full-time, salaried employees to being contract workers.
Right.
So any of those folks have to know that typically they're going to need to be on that job, on that self-employment income, having received that 1099 and file tax returns for 2 years in order to have a reliable income stream for that lender. Even if you're W-2, though, that doesn't mean that it's easy. There's, of course, a difference between being a salaried W-2 employee versus somebody who has variable compensation. And variable compensation would be overtime. Let's say you're receiving significant overtime and you're relying on that overtime to qualify you for your mortgage.
A lot of nurses rely on that. They know they get it every paycheck.
Absolutely. Commission income, somebody who has all or a large percentage of their income comes from commission or from bonus. If we're relying on any portion of that variable compensation to qualify them, then they're going to need to have typically a 2-year track record where we need to average that income. So the other thing, too, about employment that since you mentioned it, is don't make any changes to your employment situation without telling your lender. Right. I can't tell you how many times, no matter how much we talk with borrowers about the importance of that, things change, they don't tell us about it, and it runs into problems.
What about funds to close?
Yeah, funds to close, another great point. A lot of folks think, back to the old days, you talked about 6-7 years ago, when you could have the seller, whether it was a live seller or a builder, that would pay for everything, would help out with your down payment, pay all your closing costs, pay everything.
Not seeing so much of that now.
Not so much these days because it's a very tight market. Sellers know that they don't have to do that to attract a buyer. So it's not just about the minimum down payment, let's say 3.5% for an FHA loan, a minimum of 5% for conventional, but it's also about having enough money to cover your closing costs, and those would be things like your appraisal, your title fees, survey, recording fees, lender fees, et cetera. And then also your prepaids if they have an escrow account. That's their first year's homeowner's insurance premium, premium and the seeding of their escrow account too. So many cases you think, oh, all I need to have is 3.5%, and I can buy a house. Well, that may not be the case.
Yeah. All right. Thanks so much, Mike Lesmeister with Core Lending. Tell us how people can contact you to get pre-approved.
Absolutely. They can contact me directly by email. They can contact me at mikell@hlstx.com, or they can call my office at 832-286-1601. We'd love to talk to them.
All right. And you can also find a link to Mike from the HoustonRealEstateRadio.com website. We'll be right back after a word from our sponsors right here on Houston Real Estate Radio. Thanks so much, Mike.
Absolutely. Thanks for having me.